Hedgeless Horseman here. In this video I'll talk a bit about, I was going to say, everything and some news and some stocks and just overall some thoughts of investing and concepts that we're seeing in play right now. First of all, thanks to the sponsors. Second of all, let's check out our old trusted Bear Creek. Unfortunately, they diluted. They did a financing which really crashed the price. So it's, I mean, there was no single catalyst really in terms of results or anything like that. But it's, dilution, pretty heavy dilution, etc., made it crash. But it's like, it's still, I think it's still usable. It's like it's just a sign that how crappy things are, and especially what happens given that it's when this sector is bad, performing badly, which it does, I don't know, 80% of the time or something. I mean, you can just here you have the rally, then a much longer decline. Here you have the rally, much longer decline, rally. Well, this was actually quite a quick decline, but if you take this or this point to here, then you have a much longer decline. So it's like I like to use the Pareto principles, like the 80-20 rule. 80% of this, 80% of the time, this sector has poor share price performance. 80%, it's absolutely stellar. You can't find a sector that beats it. So the gains and the gains come randomly. You don't know when. They come kind of all at once, I was going to say. And then over time, they disappear. But what I've also said is, I mean, when you think about it really, a lot of people complain about, for example, this sector, that it's, been terrible for almost decades, and I mean that's kind of true, but the fact remains that it's a cyclical sector. Any single company that was still around here went up hundreds of percent from here to here. Here, some companies I bet went up 1,000, 2,000% from here to here. Every single company that was still around here, everything rallied. From here to here, everything rallied, and vice versa. From here, almost everything went down. So it's like, you can come up with a lot of excuses. Most people just throw up their hands like, yeah, this sector is so bad, that's why you can't make money. But that's also what's the word for it? I was going to say confirmation bias. Well, in a sense, but I think there's another word I'm looking for, but I can't come up with it right now. It should still, if you're really fair about it, it's like, if you know that a cyclical sector is cyclical, and in every rally, every single stock pretty much that's still around goes up hundreds of percent. Okay, how do you lose in such a sector? That's what you should start thinking about, I think, and then try to avoid the big mistakes. Because everybody's a perfectionist. Everybody wants to get the short term right, and it's like, good luck getting the short term right. I mean, everybody gets chopped to pieces, I would say. One of my strengths, I think, is that I don't try to overcomplicate things. I don't try to guess every daily, weekly, or monthly move. Not even every yearly move. I just, play heavily when I think the odds are in my favor. When the reward far outsizes the risk, let's say. And in my opinion, risk is overpaying for something that should go down and stay down. If it's worth X, I'm paying twice X, then I have a problem. Even though it could go to 3x before it actually keels over and goes to 0.5x or whatever. So that's one thing. It's like, but still, it's let's see. Don't I have a? Well, here's like, yeah, to not lose money on paper in a bear market is very often typically unrealistic goal. But still, everybody complains like there's some big problem, like something has happened to them personally, or specifically them, that's like, oh, hey, my stocks are doing poorly right now, they've been doing poorly for 3 years, like there must be something wrong. No, that's exactly how a bear market works. In a bear market, when we had one for like 3 years, that's exactly how a bear market works. You're going to be losing on, 95% of stocks are going to be down. And in the bull, 95% of stocks are going to be up. Oh, and like I said before, it's not the bear market that kills people. This is my 4th bear market. I mean, if you count this one, this one, this one, and now this. This is my 4th bear market. It's not the bear markets that kill people or kill their long-term returns. It's what people do in bear markets. If I didn't average down and be 100% invested from the bottom tick, there's no way I can afford another bear market. If you participate in bulls, you can afford the bears. Especially, the best offense you really have is just to average down when it's getting cheaper. That's your best. It's like, do you need to know when this bottoms, when the sector actually bottoms? No, not really. If you started investing here or here, whatever, if you just buy more, the cheaper it gets, your average goes down, so you'll make money. You bail yourself out again by what you do and not do during bear markets or tops or whatever. But people just throw up their hands. Everybody expecting to be making money all the time. That's what you signed up for. If you start taking things personally, it's like people get pissed off if stock X does poorly. It's hard to get pissed off when you kind of start to understand why things happen. When you start to understand why things happen, it's like then you stop taking it personally. Because you understand, okay, I understand, okay, the results were this, but this is how people are thinking right now, yada yada. If you understand it, it's hard to get pissed off about it, and you shouldn't get pissed off. Because obviously, if you think the market is making a mistake, that's an opportunity. So why get pissed off by an opportunity? You should always know if something is a better buy or a better sell. If it's a hold and you don't know, you shouldn't own the stock. That's the thing. Owning stuff that you don't know why you own it. I don't know how you should end up making money on that. And the same goes, in my opinion, for pure beta plays. I can't really. I know myself. I can't really stand beta plays. I know beta plays like Bear Creek Mining. Bear Creek Mining is at what, 35 million right now. I don't remember what it reached up here. I think like 250 million or something at least. So I know that the most heavily leveraged beta plays are going to do the absolute best from bottom, whenever that is, to next peak or to whatever peak. They will do best. And micro cappers, real micro cappers, sub $5 million companies can do extremely well. I know that. I just know that in practice I can't do that strategy really. Because it's much worse. To be in beta during a bear is like being dragged across concrete. Because there's no, let's say, alpha news to come and save you or to make the play a better play. And the fact that you think like, okay, I know I'm holding a trading sardine that you think it's a shitty project and still it's gonna fly when the bull comes around. I'm just uncomfortable owning stuff. My money has, I'm buying ownership of something I think is pretty much worthless. That is a big problem with me. That's why I've also never been really good at trading, because I don't, the idea of just flipping paper as a strategy, that just doesn't sit right with me. I like the idea of owning partial interest in something tangible. I like being an owner. I like right now being an asset hoarder. And everybody's playing the same game, and they'll do that forever. Chasing short-term gains, that's why it's like, I don't watch financial news, but I assume that almost every guest they have on is like being asked, you know, what do you think is going to happen in the short term, and what stocks should you be in right now for, you know, short-term gains? Which stocks do you think will go up in the near future? I think that's the name of the game for everyone. That's also why you have such why the market is so momentum driven. And everybody's also chasing certainty. And that's why I think a lot of people want to be told again what's going to happen in the short term. What's going to happen in the short term? What's happening today? What does it mean? What does it mean that silver is down 1%? Face value, it means nothing else than silver is down 10% and producers get a bit less today than they got yesterday on their production. But for a silver junior that won't have a mine in like 10-20 years, who cares? I mean, it doesn't matter, but still, you know, we made it so it matters because people are affected by it. Then it matters in the short term. So everything is just a self-fulfilling prophecy, basically. Cards, this should be shorts. Yeah, I mean, if you think, I mean, you don't really get it at all if you think you have a big problem if you're down a lot even in a bear market, especially in the most volatile sector around. Because we pretty simple stuff here, but it's like, okay, if I'm down 50% in a bear market bottom, I need 100% to get back to even. Okay, take Bear Creek Mining here, was the bottom. Okay, when it reached this level, you would be plus minus zero already. And this is what came in addition to that. Okay. Here we have 100%, $1. It reached $3.8. Okay. How big of a problem is minus 50% on paper really? If you own stuff that has staying power right now, let's say pretty good access to capital, whatever, and you think it's dirt cheap, what's the problem? This sector is not going to go down forever. It's never gone down forever. Only a complete idiot would think that this bear will continue forever, because it never has. But there's a lot of idiots out there. There is a lot of idiots. Or the markets makes us stupid. I don't know why. It's like people forget about cyclical sectors being cyclical. I mean, a broken clock could make money in this sector. I think right now the market is absolutely brain dead. Absolutely brain dead. What we're seeing out there is the reason why you can make so much money over the long term in a sector like this, because the market is absolutely brain dead, and it's brain dead to a lesser higher degree at the tops as well. Brain dead, 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 brain dead. It's just brain dead a lot of the time. But it never stays brain dead in one direction. Brain dead to the upside, brain dead to the downside, brain dead to the upside, brain dead to the downside, brain dead to the upside, brain dead to the downside. I mean, it's a complete joke. I don't know if you have just common sense and infinite patience. Basically, how do you lose in a cyclical sector like this? Nothing fancy. It's like, how do you make some money over time in a cyclical sector? You're around somewhere along, or you put most of your money in somewhere along some bottom. Sooner or later you're gonna be up a lot. then you're gonna give it almost all the way back. Then you're gonna be up a lot. Then you're gonna be down a lot. Then you're gonna be up a lot. Then you're gonna be down a lot. Yada yada yada. And let's say you pick an alpha stock here or there. And it's like now, given how cheap everything is, including exploration plays, including beta plays. So the beta plays, I mean, again, do you need to predict the market? Did you need to know that this was not the bottom? If I bought here, I thought this was the bottom, my life is over. No, absolutely not. You can add, you can reshuffle, you can do a lot of stuff without trying to predict anything in terms of where the short-term move is going to be. Was this cheap? Yeah, this was already cheap. That's all you know. So, okay, let's say below here is the point of no selling. Then it's just, who cares where the actual bottom is? Because you know that if it gets cheaper than here, it's just a better buy. And then you can value shuffle internally, even if you're all in. It's like, okay, stock X went down 20% for absolutely no reason. Then, people being brain dead, or someone needed to sell, or someone got divorced, or whatever. But the big mistake is obviously trying to time the market when we get to extremes. That's my opinion, because this isn't even a problem really. There's always something to do. Oh, so this wasn't the bottom, it went up, it went cheaper. Okay, well, even a better buying opportunity. And when people hear that, it's like, well, I've heard it for over a year. It's like, yeah, so what? It's the truth. You would be stupid if you don't realize it. It's just common friggin' sense. The cheaper something is, the better buy it is. It's a good buy here, but only if this is the bottom. It makes absolutely no sense. It just gets easier and easier. If overvaluation is something that is an actual mistake, how many mistakes do you think you have out there right now? In your portfolio, how many juniors do you think you own that are actually overvalued in the long term? Because if they're undervalued based on the long term, that doesn't stop a stock from being able to go down 50% in the short term before rebounding higher, and in the long term getting closer to fair value. Something being cheap does not mean it's the bottom. Stuff, I think, were already cheap here, especially high quality stuff. Now it's just way, way, way cheaper. If it goes down even further, it's just way, way, way cheaper than that. It's like it's getting more and more no-brainy, let's say. This was the absolute, in hindsight, this was the absolute best buying point. Why? Because it was the cheapest. Simple as that. This was cheaper than this. Better buy by default. And if it would have gone down even more, even cheaper, even better buying. So it's like you can bail yourself out. You can't afford to sell cheap. That's what you can't really afford. You can. I mean, let's say you started buying here. Oh, you think your life sucks or whatever. It's like, and we have some kind of choppy movement until, well, I don't know. Let's say 6 to 12 months more. You get a year to add at these levels, and your average, if you bought all the way down, it's like the longer it stays down here, the more money you can put in, the more you can reshuffle, whatever. So the quality of your portfolio goes up, your ownership in companies goes up, yada yada yada. So it's like, yeah, maybe you'll quote only be down 50% at some point after averaging down, reshuffling, so the quality of your portfolio goes up. And yeah, of course it would suck if 4 years and you're sitting at minus 50, let's say, here. Yeah, that sucks. Then inevitably the bull comes around. Let's say it's the biggest bull, because this is like almost the worst bear market, well, at least since here. I think it's much cheaper now, given that gold is at 2,000 and not 1,100. Your portfolio goes up 1,000%. You need 100 to get back to even. Everything other than that, pure profits. So maybe in 4 years, you're minus 50%. And it's been grueling. 4 years of not getting rewarded from your smarts. Well, the smart thing to do is obviously to stick with it because you're betting on the inevitable. So you might look dumb for 4 years, then look incredibly smart in 5 years. If you threw in the towel at any point in time before those 4 years, and obviously the longer a downtrend has persisted, the closer you are to the next uptrend, the cheaper it is, the higher the returns and all that. So selling becomes exponentially worse by default, just common sense. If you make any mistakes like selling out before that, yeah, then you can't afford a bear. Because you misplayed the bear. It wasn't the bear that killed you, it's what you did. If the bull starts here, you sold here. If you would have held on, you would have made everything back and then some. But you sold here and found another sector get in here. Same bear market, but somebody did not throw in the towel, so it was a long for this, but somebody just before threw in the towel. They were a part of the same bear market, maybe a month. This person got in a month earlier than the bear market started, and this person that stayed for the bull market, or bull market started, he stayed for the bull market. He held on 1 month more, got rewarded by, let's say, 1,000% over the next 1-2 years. Again, same bear market, only difference is that one couldn't stand it, sold 1 month before the bull market. So it's obviously not the bear market itself that kills long-term results. It's what people do. If you do stupid stuff, you deserve to lose. Okay? And there's a lot of stuff in this sector because this is a high risk, high reward sector. The earlier stage stuff, especially exploration, high risk. High risk. People forget about the high risk part. They take everything so goddamn personal. It's like, oh, this exploration story didn't turn out to be a 10 to 20 bagger like anybody would even be a part of it, because most people sell after a 100% return anyway, or they chase something when it's only overvalued and never buy cheap anyway. But let's put that aside. It's like, oh, no kidding. You expect to every single promising exploration story to return out, 10 to 20 bagger in the next 3 years. So it's like you expect to have 1,000 to 2,000% returns every 2 years, just going like that. I mean, you would be obviously a trillionaire in 5-10 years. Doesn't work like that. But everybody gets so pissed off that not every single exploration story works out. It's like, given how cheap stuff is out there. I mean, take this, for example, this group of companies here. Here's some juniors with third-party validation. It's like, Headwater, Newcrest, NICU Gold, Rob McEwen, Ross Beatty, whatever. It's like, how many, given, I don't know exactly what these are all trading at, but from these valuations, like Brixton Metals, I think that's what, 60-70 million right now, got BHP. Hannon, I don't know what the market cap it is. Philo Mining is obviously, that's not a micro capper anymore, not by a long shot. But there's a bunch of stuff here. It's like, if you look up the market caps, and you figure, it's like, okay, what would Hecla Mining or Newcrest or Tech or whatever, Alamos, Kinross, what kind of what project value would they need to see to build a mine? And if they're saying they think there's a shot at having something that's worth their time there. So if, let's say the average, I don't know, but let's just guess here that the average market cap of all these juniors is like $40 million, something like that. And you think that, well, the average project value for any of these majors, some would probably require 2 billion NPV projects, but let's just stick with 500, keep it a bit conservative. Okay, so the upside is 40 million to 500 million per company. If 1 in 10 is able to do that journey, including dilution, you would need to be right on 1 out of 10 stories here. I don't know how many stories are here, but let's say it's like, 40, 50, 50. Let's say you buy all of these cheap, 5 out of 50 work out, and you'll be in a small profit. And that's counting that the other 45 go to zero, which is not likely. So again, how do you lose in this sector over the long term? Is every one of these companies that don't find a significant discovery at their flagship project gonna go to zero from here? Forever zero? I don't think so. If there's a bull just around the corner within the next 2 years and these guys are still around, even the ones with, I don't know, decent success or whatever, even if they're diluted by 50%, you'll be up on them. So I can't figure out, like, what is so hard about this sector really? Is it that people can't stand looking at heavy paper losses? Is it too much for the ego? I think that's the problem. And that they, I don't know. I don't know. I don't know what it is so hard. Obviously, a lot of people make mistakes all the time, because that's why almost 5% beat an index over the long term. And I think it's even less in this sector. But I can't really figure out exactly what it is that makes it so goddamn hard. Because, I mean, when you just think about some of these concepts, it's not, I mean, Arizona Sonorans, like, they got tech involved. Copper advanced asset. Is that going to go bankrupt anytime soon? I wouldn't think so. Can copper prices crash and copper news crash? Absolutely. But it's like, over the longer term, if those guys are still around and we reach a copper bull in whatever, in the next 1 to 5 years, you'll probably make money on Arizona Sonoran. I mean, when you just think about some of the common sense things, it's super weird when you think about it. I mean, it's almost embarrassing from a long-term perspective how you can lose in this sector if you get opportunities like this and this and this. And believe me, there's a bunch of bets that, I might be down 80% in. But it's like, there's a lot, I play around with a lot of bets. It's like, if there's a high risk, high reward story, I put in, I don't know, 0.5%, 1% of the portfolio. Goes to shit. It's not just going down 50% in price or 80% in price, but it's like the story is actually, I mean, the story is over. That's a loss, obviously. But it's like, hey, well, I can buy everything else really cheap now. So even if I was down, I don't know, 70%, whatever, it's like in the portfolio, it's like, oh, my dry powder has very high expected future returns. So if I can, again, claw that portfolio loss from 70% down to 60%, I'm probably going to be more than fine over the long term until the next bull, because that's just a bit about more than 100% up from these levels, and I'm already going to be plus minus zero. And we know this sector does way more than 100%. There's like advanced projects out there that are pricing in a 10% chance that they will be a mine, and they might have some of the best projects in the world. It's absolutely crazy. Not even high risk. It's just the market is absolutely brain dead. So a bit of a rant, but it's like my point in doing these rants and being a bit harsh, etc. It's like I'm trying to, I don't know, produce some kind of call to arms thing. It's like the market is brain dead, clueless. It's like I assume the market is always wrong, and then I just think about what stuff that makes sense, common sense stuff, and then you think maybe you get paranoid, like it can't be that easy. Why can't it be that easy? How many do you think can actually follow common sense and have the patience to follow common sense? More importantly, almost nobody. Obviously, just look at Twitter, look at the forum. Everybody's short-term orientated. Nobody's thinking about the value, the long-term value, or the news release 6 months from now or 12 months from now. Everybody's guessing what the price is going to do tomorrow, and that's going to be skewed by the short, the recent trend. So just if it sounds too, I was going to say too easy to be true or too good to be true, Just look how people write in the forums. What are they thinking about? What is influencing their decisions? And it's almost always short-term expectations, and they do the wrong stuff at the wrong time, because most people right now can't even see why you would want to be in miners, which is like absolutely crazy, given that this is probably the best buying opportunity since 2015 or 2008. And if you can't even see that, I don't know how on earth you're expecting to. I mean, how can you have the nerve to think that you'll have good long-term results if you can't even see the most obvious thing there is? Anyway, yeah, already gone on long enough, I guess. But another example, like Berkshire Hathaway, run by obviously Charlie Munger and Warren Buffett. They are considered to be kind of the best investors in history. And this is their investment vehicle, Berkshire Hathaway. And people again think that, paper losses. Well, if you can never afford paper losses, how come Berkshire Hathaway has gone up from 20 to 340 in I don't know how many years? And it's been around way longer than that. But that's what? Almost 1,700%. And this is a mega market cap company. It's been for quite some time. Well, here they had a 51% correction, paper loss, 55% paper loss. This top was in 98. It was back to the same price and even lower in 2009. Isn't that incredible? 10 years. And on paper for a while, you hadn't made any money ever since going back to 1998. "10 years. At the time, I bet people were bitching and complaining about this has gone nowhere in 10 friggin' years. But if you really zoom out, because this is short term, this is market being stupid, probably market being stupid, whatever. Long term, no problem. So again, obviously, if Berkshire Hathaway can have 55% corrections, you can certainly have that in a much more volatile sector. And unlike mega cap stocks, when the junior sector goes in a bull market, we're not talking 100% returns. We're talking 500% returns and stuff like that. So it's obviously not that you can't have paper losses or that you can't go into bear markets that kill people. You can even have 50% plus paper losses in Berkshire Hathaway, for God's sakes, and still end up with a lot of money. If you bought all the way down, you would have made a lot more. Because from this top, that's a 532% return, double from there. So again, it's not the actual bear markets that kill people, it's what people do. If you buy here and sell there, buy here, sell there, buy here, sell there, you're gonna end up losing money on Berkshire Hathaway. If you just held it, you do very well. If you held it and let's say just bought more at every correction, you would have made even more. Sure, if you actually made some top calls as well, or timed one or two tops, that would be great as well. But sometimes, like if you thought this was a top and it wasn't a top, you lost out. I'm very bad at selling. I'm very good at buying cheap. I have no problem knowing what to do in this sector, and I know even more what to do if it gets cheaper by default. Let's look at some news. Eskay Mining confirms new precious metal-rich VMS discoveries at its consolidate Eskay Creek project. Golden Triangle BC. Drill intercept of 6.28 grams per ton AU equivalent or 15 meters. Almost 3 over 22, 2 over 61, 1.4 over 45. So I mean, those are obviously not bad. They're near surface. This is high grade. I think that's including 8. Well, that's how much? 12 over 3.41. That's money. Let's see here. This is 3 over 22, including 19% zinc. 13 over 1.75. I haven't done the diluted grade, what the residual grades are, but 13 over 1.75 is, I mean, that should be good anyway. 4 over 20 meters should sort, I mean, in a bulk mining environment. These are not Eskay Creek grades though. I mean, this is not the $4 billion Eskay Creek bonanza type grades. But is there something there? Are these results poor? No, they're absolutely not poor, obviously. I mean, this is, I think someone calculated this was like a 95, 96 gram meter interval. I mean, that's almost 100 gram meters AU equivalent on the first try over at Cumberland. The thing is, there has been historic drilling before, so I don't know the exact context here. I mean, how many thousand meters have been drilled in total, how close it was to maybe historic results. Maybe it wasn't close at all, or maybe it was close. I don't know. 1 second, I need to change something. Maybe it wasn't close at all, maybe it was close. I don't know, but obviously these are far away from dusters. This is high grade VMS mineralization. Over at Cumberland down here. Here we got TV South, Jeff, yada yada. Here's the famous Eskay Creek. Here Cumberland holes. Here we got the grades, yada yada. So it's like, is there something here? Well, obviously there's something here. This is what, 25 grams per ton AU. That's, okay, this is the drilling, so that's like what, 300 meters away or something. Significant AG soil anomaly. This is like, yeah, 300 or something that way. So this is 300 meters from here, and this is 300 meters from here. So it's like, is there some, I mean, obviously a lot of, I was going to say, bashers or whatever. It's like, they think that the share price is kind of, it's dead, it's over. It's like, their land position is absolutely huge. This is a 5-kilometer scale bar. What they drilled here at Cumberland, for example, that's like a tiny blip. I don't know how many meters of drilling you would need to confirm that there's not a single significant VMS deposit in this entire land package. But that would be a lot of drilling to kill this district. So here you have Mahogany Ridge, and I mean, you can read the news release yourself for some additional context. Hopefully Quinton will touch on this. So it's like, if you look at the share price of Eskay, from the peak, I think it's peaked around 550 million market cap. That is a sore sight. I understand that it's like, it's not, as a holder of Eskay, it's not been a fun ride. That I can understand, but you have to separate the actual underlying value, otherwise you're lost anyway. Because if you think the market is always right, that by definition means that you have no chance of beating the market. I mean, that's what you're saying. If you think the market is always right, you're saying you can't beat it. That's the thing. And that's why I find it so funny that everybody says, well, I'm looking for superb returns, and then they believe every single price swing in the market. It's like, okay, how does that work out? So you think you can beat the market, but the market's price swings are always right. If it goes down, it's always a sell after the fact. If it has gone down or is in a downtrend, it's always a sell by default because the market is always right. If it's gone up or going up after, I mean, recent past has been going up and went up today, whatever, then it's a buy because the market is always right. But it's like, well, that's just looking at what has happened. We're interested obviously about the future because it's relative to what we are now relative to the future. It's not where we are now relative to the past that affects us as shareholders. I don't give a crap if something is up 10,000% and you know, should I buy that? Well, if I expect it to go down 99%, then it's obviously not a good buy. Or if something has gone down 99%, maybe it's a fantastic buy. You know what I mean? But it's like, okay, stock I think got pretty hit today. I think it was down 26% at some point. Here we got Scarlet Knob, Torn Lake. I mean, that's the thing. It's like there's smoke all over the. I mean, if you look at the Bleg surveys, I don't think they have the Bleg survey in here. No. But you have to go to presentation. I mean, there's like 310 plus kilometer trends of anomalous Bleg samples. But VMS deposits are tricky. I mean, it was, what, 140 holes to find Eskay Creek? Imagine that, 140 holes drilling around here before they actually hit the Eskay Creek deposit. And it's like a snake-like deposit, it was faulted and all of that. So unlike disseminated systems like Snowline Gold, for example, it's tricky to hit, and even if you hit, it's tricky. You don't know exactly the size, you don't know exactly where it might go to. I mean, you're going to be helped by doing, you know, looking at the core, etc., and seeing the alteration and maybe some geophysical, whatever. But it's like, this is tricky exploration. But at the same time, we know Eskay Creek exists, which is would be worth like 4 billion today, if it was, you know, drilled up, etc. And of course, a lot of people in hindsight will, SK. I mean, was SK Mining ahead of itself at? I think it reached a 550 million market cap. I mean, now we know, of course it was. But the same goes for everybody in Snow. Well, a lot of people said that about Snowline, because after Snowline just had a few holes into the Valley discovery, it was already at, I don't know, 200 million or something like that, maybe even more than that. Now we know, okay, yeah, you know, it wasn't ahead of itself based on what was to come, but we don't know that at the time. And that's why I think, for example, I mean, at the time, so okay, you have a 500 million market cap. That is pricing in a future of growth, pretty rapid growth, and obviously substantial growth, because for people to be, quote, happy, you would need to grow that 500 million up to 2 billion in the next 2-3 years or something. So you need to kind of create, let's say, $1.5 billion in value. Well, how do you do that? Not by playing it small, obviously. Because if you do really, if you drill 5 holes per year, how on earth are you gonna grow out of a 500 million market cap valuation? So they did a carpet bombing campaign for, you know, X kilometers along TV and Jeff. And I didn't mind that at the time, because I understood well, this is really the only way, at least from here, that's the only shot really of growing out of the 500, growing past the 500 million market cap. When we got the assays back, we learned that, well, I mean, they hit some smoke and some, there's mineralization, etc., but they didn't prove up 3 kilometers of strike, of VMS strike. So all of a sudden it's like, okay, we did not get the growth that you kind of require if you're at 500 million market cap. Instead, they, you know, mostly drilled dusters for, I was not going to say all intents and purposes, but assay-wise, majority were dusters. Boom, okay. Now we don't get the growth we needed. Now there's no way that they're gonna reach $2 billion probably in the next 2 years, for example, because the mood soured, the market was in the had tanked already, etc., etc. So it's like, I think we can understand it's like why they did it, the merit behind it, that okay, if we're gonna keep making shareholders happy, because everybody was celebrating at 500 million, of course, if they would have hit, we would not be down here, people would not be pissed off, feel bad about the share performance, etc. If they delineated 3 to 4 kilometers of BMS strike, we would probably be sitting at one of the most impressive discoveries in a long time. But they didn't. And here we are now. And again, nobody knows that beforehand. That there's a alternative universe where they actually hit BMS mineralization. TV and Jeff were connected, easy to hit. They're blind drilling. They're based on the geophysics. It all proved to be the treasure. The X marked the spot on the treasure map, and nobody would be complaining. But that doesn't matter. We're here now, and we have to judge every single investment based on the current price relative what we the scenarios we expect in the future. Is there a lot of potential in this land package? Absolutely, I think so. They're showing it with what they just hit at Cumberland. But okay, from a momentum perspective, it's like how do markets actually function? Well, okay, what happened? Why is it down today? I mean, I think there's a few reasons for that. Foremost, I would say, or I think like as soon as you saw, okay, the results were good, but not fantastic. So immediately people, given that they have seen, I don't know, countless companies release good news with no share appreciation. Okay, they know the news is good, but they think that in the short term nobody's got you're not going to see people buying it. So you don't think there's a short-term profit to be had in Eskay Mining. And again, what's the focus right now? Like always, short term. So if you expect to not make money in Eskay Mining in the short term, you're gonna sell. And some people held it because they thought that, quote, hot money is like, if they drill well, I'm gonna sell on the news regardless. So you have pent up selling demand as well. And then you have the idea that, hey, maybe Eskay Mining, unless they do a deal, maybe they'll need to raise money in the not too distant future. Okay, then do I have people that front run stats like, well, I think they're going to do a placement, and I've seen what typically happens in a placement or whatever, or you think that other people will sell for the placement, so you want to front run that. And also this is BC, so there's going to be a quiet period in the winter. And if there's anything that people hate, it's the idea that they can't get rich tomorrow. And if they're not drilling anything, or there's no assays to come over a 5-month period or 6 months or more than that, people don't see a need to be in it because they want to get rich tomorrow. And the fact that, well, okay, if you buy these companies during the boring period, maybe you'll wait 8 months for a pretty high probability, let's say 50% returns without taking assay risk even, doesn't really matter to people because you can't get rich tomorrow. People don't care about high probability, let's say 50% returns. They want to get rich tomorrow. They want to have that 1,000% in the next 6 months. So it's like you can understand, or I hope can you see how people are thinking like that? And obviously then you're gonna get the bashers and whatever, because misery loves company. So it's like people are hurting right now because they don't know what's going on. They've never seen many people have not seen a bear market before. Even if they have, they might be hurting anyway. So people enjoy seeing other people in misery or piling on or whatever. Again, misery loves company. There's a few investors that I think are really good in the junior space. They never bash. I never see them go around and bash other companies or something like that. They're busy winning. They're busy focusing on their own stocks. The long side, they don't try too much to just, whatever. And again, like, realize how few actually make any money in this sector, even long term. Anybody can make money in a bull, anybody can lose money in a bear. But to make money long term, there's very few people. So all the posters you see out there in the forums, 98% of them probably do not make any money over the long term. But almost everyone is very quick to give advice or tell other people what to do, buy, sell recommendations, etc. And you have no idea. They might be the shittiest investors in the world. But that does not stop people from trying to, from speaking their mind, let's say. It's like it's totally, I was going to say legal. You can do that, but just keep that in mind that most people whose opinions you read are coming from a mind, let's say, that cannot beat an index. So just to wrap out Eskay, I think there's huge potential in this land package, and still, there's a bunch of targets that they haven't really tested yet. And even if, to properly test any of these targets, I don't know how much drilling you would need to do really. And obviously at Cumberland they're showing there's VMS mineralization there here as well. Who knows? Is it like TVGF where it seems to be very tricky to actually find extension, or does it just continue that way and continue that way, and you have it running all the way down here for hundreds of meters, and another horizon up here or whatever. I don't know. I sure don't know. But like there's obviously they're hitting something, and this might be a big deposit hidden here, or there might be no deposit hidden there. So this entire land package might have anything from 0 to 10 significant VMS deposits. But it takes money to find, and in the meantime, time, money, luck, and brains. And in the meantime, we're in a crappy market where it's like if people don't believe they're gonna make money in the short term, they're not interested. It's a voting machine. Headwater Gold consolidates Spring Peak land position through private land agreements and additional staking. So like that's the funny part. Like, okay, they released this 2 days ago. Headwater announced high-grade gold in initial result from Spring Peak drill program Nevada. That's just one of their 12 projects. They're drilling 4 right now. So you saw those results, more high grade. It's like, yeah, it's open every direction. There's, excuse me, open in every direction. They have more than one target. All of these white dots here is like assays that are waiting to be drilled, or assay results pending. That's what I was gonna say. So here you have 0.33 meters of 23 grams. Here you had, well, this was actually the best hole I think so far. So there you have a hole coming pretty close to that. This is pretty close, and then we know. This is 100 scale bore. So here they have, well, that's relatively low grade though. Well, that is low grade. 1.2 meters, 13. This is in this release, so that's maybe, what's that? 300 meters, 250, 300 meters strike. If they hit on any of that, then it's like, well, that's a pretty decent strike length already. And I don't know what the threshold for success is, but this is only on one structure. But you see that, okay, you get these results. Market doesn't care because there's nobody thinks it's a good idea to buy miners right now, regardless of how cheap they are. And then they follow that up with, hey, we staked even more land. Do you think they believe that the results are bad so far? Is that why they, staked ground immediately? Or has staked more ground, and they're talking about there's a bunch of target zones, and this is again just one project near a historic producer, the Aurora mine, now belonging to Heckland. I think they're actually doing work there right now, or has been recently. What is just the potential of Spring Peak project worth? If it goes really well and Newmont, which is acquiring Newcrest, does not walk away, they'll get 25% of whatever is here. If Newmont walks away, which I'm kind of hoping right now, that it's, that yes, it was big enough for Newcrest, but not Newcrest Newmont, then they get 100% of all this and that. Plus 11 other projects. And the market cap is like 17 million Canadian. It's just absolutely, you can't really complain about this sector right now, because if you're overpaying for anything right now, then you have to be really expert in crap spotting. I was gonna say, it's totally unreal. I mean, there's almost no trading on a daily basis in Headwater, so there's literally almost not a single person on the planet Earth is willing and able, or does not recognize this for what it is. I find that absolutely fascinating. And for better or for worse, it's not only Headwater. There's a bunch of juniors out there that are just no-brainers. And value potential is obviously going up, but I don't think the market cap repriced at all. I don't think the market cap, well, let's see here. Nope, zero volume. It's like close to 1 year lows. Think about that. This is in Nevada. Confirmed high-grade hits near a project belonging to a major. They increase the land package, and they talk about, so they have more room for infrastructure or whatever. And Mr. Market voted, the Mr. Market quote that's always right, 0 value addition. This didn't change the case at all. This did nothing for the Spring Peak project in the eyes of Mr. Market. If that's not dumb, I don't know what is. If there's a 0.1% chance that there might be some potential or value add, even if it's just to, they have an easier time putting in a shitter or whatever you would call it, like a water closet, or can have a parking lot for a potential mine or whatever. Anything at all that saw some value addition from this acquisition. But in the ISO market, nothing at all happened. That's interesting. Cartier reports high-grade silver, lead and zinc values from systemic channel sampling of the underground artisanal working and its Gonalbert property, southern Bolivia. I don't know what it is about South America. I've seen Condor get hit as well, which is in Peru. And I saw Elora get hit. I'm not sure if it's in the wake of the Panama First Quantum thing, where it's like, I think Panama is doing a, what's it called? Like a, they're gonna vote some, I don't know, constitution, whatever, something about, potential nationalization or something. I think that might have spooked people overall. And again, right now in this sector, there's a bias to the downside. People are very close. They have their finger on the sell button. They're not pressing the buy button right now in this sector. They have, if they're still around, they have the finger over the sell button. Anything at all that makes people a bit more depressed, and they're gonna hit that sell button. People are right now, they are focusing on risks. People are focusing on how not to lose more money. That's the only thing people are focusing on. Anything which gives them a bad taste in the mouth, and they'll hit the sell button. And again, everything is, I don't know if I went through that, but everything is relative. It's like Eskay Mining, whatever. It's like, it doesn't matter right now what the valuation is, because it's a relative game. If something's dirt cheap, so it's a buy by default. some news comes out, some potentially bad news comes out, some, it's, let's say a 5% chance that something that is dirt cheap will at some point get nationalized or whatever. There's like, okay, 5% chance it's already pricing in at, 30% chance it will be nationalized. So it shouldn't even go down, but it will still go down because everything is relative. If there's a negative surprise, regardless of how cheap something is, when the sector sentiment is this bad, it's going to be relative. It's going to be judged relative. It's just, what I mean by that is you have something that might be worth 100 million is trading for 30 million. Even if something came out that still has the company very, very cheap, or it's more or less pricing in that very thing that got announced or whatever, it's still gonna go down because it's just another straw on the camel's back. So it's relative now with a bias skew. Doesn't matter if it's cheap. If there's something that could be seen as negative, it's gonna sell off. If you have a string of stuff like that or whatever, you're gonna have more of a downtrend forming, and that's gonna get the trend chasers, which is almost everyone, to sell as well. So you have a perfect storm right now out there, and that's why the bargains at extreme lows in this sector are so extremely good, because everything works in a relative fashion. People don't look at price in the news and say, well, okay, I think the company is worth X now and it's trading for 0.3x, so it doesn't matter. No, if they see something that gets them spooked or something, it's gonna go from 0.3x, 70%. I mean, it's trading for 30% of fair value. It's gonna go down, so it's trading at 25% of fair value. Stuff like that. That's just how it is. So they did some highlights from Mina Central Edit include, you can see here, I mean, obviously, bonanza grade, both lead and silver. High grades as well. You can read the news release yourself. A relatively strong chargeability anomaly extending northward from the Mina Central area for approximately 700 meters is prime target for further drilling. And they did announce one drill hole, which was, this was kind of, bull grades over 45 meters. This was the first ever hole. They released the two other holes. I'm pretty sure I read drill hole DGL2, so the second hole did not intercept any significant mineralization, did not reach design targets because of the note plural targets, because of difficult ground conditions. Drill hole 3, yada yada yada. This hole is widespread low grades, blah 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 blah. 4% zinc, 1% lead, 32 grams per ton AG, 0.5 meters, very narrow. 2.5, this could probably be, vein mined like they have been doing, the artisanals, especially given how cheap labor is. But so no whammer of a hole, good channel samples, but again, it's like they've drilled 3 holes. So this is still very early stage story. And they've sampled, I think they said they sampled like along 2 kilometers of strike or something. So they're not necessarily after these vein deposit, I think they're after something really big. Mini version of Eskay, or maybe not even a mini version. So I'm not sure how the veins, the higher grade veins, how that ties into the story exactly, because because there's already mining going on here on the vein, so it's like there's already a mine here, but I don't know how that fits in the overall picture, let's say, because I think, as per Elora, I think they're after something big. Major mine potential, and not typical vein potential. But I don't know. Maybe things will change. Maybe I was gonna say intermediate sulfidation veins or something like that. I hope they actually do a webinar or something and explain it a bit more. But I do tend to, especially the earlier stage, I tend to focus a lot on the commentary. It's like Osvaldo Arce, systematic channel sampling in underground workings at Gonal Bear properties confirmed the high-grade nature and extension of silver-rich structures with increasing grades at depth. Okay, that's one thing to keep in mind, increasing grades at depth. These are important targets for further diamond drilling. Additionally, the surface geological reconnaissance of the Bolivian polymetallic type mineralization away from the historic mines reveals mineral continuity in an area that has not been historically explored, which significantly expands the enormous exploration potential. So, okay, I don't think the stock did a move at all today, maybe down a bit actually. Yeah, okay, I mean, pretty much nothing happened. 68,000 shares traded, 12 million market cap. I mean, it's not pricing in much of anything, obviously. So it's one of those high risk, high reward stories. If they end up finding something, this will look really, really cheap one day. Eloro, I think, topped out. The recent top, at least so far, was, I don't know, 300-400 million. This is trading at 12 million today. So am I like, go all in and hope for a 30 bag or something? No. But there's obviously potential here, and the channel samples confirmed that, and they're learning more about the systems. They're only 3 holes in, and they've already hit a pretty decent hit of bulk mineralization already. So there's obviously something there, and 2 kilometers or something of underground veins exposed. So do I think this is cheap? Yeah, I think Cartier is cheap. And again, it's not that it's super hard to find something cheap right now. But that's why I like spread betting these high exploration stores. I mean, high risk, high reward stores. If one of these work out, maybe it will become a 20-30 bagger, especially going into it, because the perfect storm would be a discovery and let's say 2-3 years worth of growth going into a sentiment bull where you have 1-2-3 years of increasingly better sentiment as well, because then you have a multiplier effect. So you find many ounces, and the ounces you find get increasingly more valuable, or in the eyes of Mr. Market at least. So yeah, I think simply this is one of those. It's like it's a long shot, but there's potential that they find something. And if they find something, 12 million market cap will probably look very cheap. And I think there's a lot of insider ownership and all of that. It's a very tight share structure, at least. I mean, it can move. What's it? Like what was that? Like 100% or something. And now it's sold off. So yeah, it's like I think this is one of the better high risk, high reward stores out there, and by definition, I don't think you should be betting the farm on any one of these. Because yeah, in a perfect scenario, you go all in on one of these, they end up making a discovery. You hold it all the way to the whatever top, so you 20 bag your entire net worth or portfolio. But it's like, yeah, that it might be a 5 to 10% chance of that happening. Let's say, do you want to take that big of a risk with your entire net worth or portfolio? No. But if you write on 1 out of 10 of stores like this, I mean, that could be a big boost. And of course, again, the cheaper they are, if this was trading at 40 million, it would be pricing in a higher chance of finding something 500 million or 1 billion. So you can the cheaper it is, the more you can afford to be wrong, because any success will just go up that much more. Line 1 drills 2.4 meters of 19 grams per ton. It's funny, it's like you see the headlines, so okay, maybe that was the only good result or high grade result. But it's like, nope, 18 over 3, 86 over 0.6, 11 over almost 4, 47 over 0.6. So I mean, there's a lot of high grade gold, and as theorized, the belief still is that given the nature of the branching micro veins, let's say, that the assays, the drill holes are actually underreporting the actual gold grade. That any of these holes probably missed veins that are close by, but were in a different orientation, so they weren't captured by the drill hole. So in a mining scenario, all of these, if they mine this stuff they're hitting, it might be even higher grade. So encouraging, again, or not again, but okay, what's the thing that's been going up in value recently? Sunk cost, capex, because inflation of higher rates. Well, they're basically in production already, so they're past that already. Permitting, increasingly hard, everywhere almost. Well, they have all the permits already. So I mean, just the inherent stuff behind this, that I mean, the stage they are, that is so incredibly hard to reach today. I think Lion 1 is really cheap based on that. I mean, where are you gonna buy producing high grade mines right now? There's not too many around. Even if you find something, it might be 10 years for you to permit it in most jurisdictions. Cabral Gold drilled 16 meters of 5.2 grams per gold from 7 meters depth in oxidized material at Central Gold Deposit. So Cabral is in a much better state nowadays because they got money from Osisko, and that's a third-party validation, obviously. If you get a kind of a royalty company getting in, what they're saying is, hey, we think this will actually be a cash flow producer. Be producing cash flow sometimes. So it's like most of the time, perhaps the best technical validation you can get from an economic standpoint is the royalty companies when they put money into something, because they only get money if it goes into production. They're not penny flippers. They own the royalty. That royalty is worthless if there's no cash flow within the next 20 years or whatever. And Cabral has been beaten to hell, basically. Yeah, I mean, the short from the peak, again, boom, down, I don't know how much. What's that, like 90%? 90% down. And this was what? Osisko Gold royalties. Is this cheap? I think so. I mean, I think the oxide stuff is really low-hanging fruit. And in my opinion, what makes Cabral interesting is the fact that G Mining Ventures is their neighbor. It makes perfect... I mean, if I had to guess, I think that's what Osisko is kind of front-running, that they believe G Mining Ventures will acquire Cabral one day as their long-term growth vehicle, if you know what I mean, and that's why I think Osisko believes that it will be put in production. And especially this near surface, I mean, it starts at 7 meter depth, for example. I mean, this is I don't know what kind of margins you would have on this stuff, given that it's like heap leachable and all of that. Starts at 7 meters. I think it's in saprolite, so no blasting or anything, just chuck it up. Really high grades. I mean, everything will not be as high grade as this, but it's like, I don't know. I mean, if you have 50,000 ounces of this stuff, maybe that's several tens of millions in cash flow. Maybe, somewhere along that. So I think it's not the sexiest thing in the world, near surface oxide blankets in saprolite, but from a cash flow perspective and how easy it would be to permit, let's say in Brazil, I think that's being very underappreciated. And Altamira has something similar as well, which I really like. Core assets, just gonna touch on announces. I'm actually participating in this. This is my second time participating with core assets. Obviously I'm down on core assets, but still 12 million CAD. Well, that's going to be diluted a bit. I mean, if I didn't get the war, I mean, there's only a half warrant, so I mean, that's impressive. I thought they would for sure need to give out full warrants in this environment. But the idea, okay, I love real estate. British Columbia's most northern emerging district scale CRD porphyry project. I think they have this nice slide with... No, they don't have that slide? Maybe not, okay. Where they had a slide where they kind of show the footprint of some CRD systems and how big... I mean, the confirmed... Yeah, they don't have that, okay. How big the confirmed... I mean, if you take the, northeastern edge where they found CRD and the southwestern edge, whatever, it's like the largest CRD footprint in the world, kinda. So the simple idea on my side is this is an absolute monster scale project. It's with what looks to be a huge CRD system. I mean, is it economic? I don't know. I mean, it's obviously not pricing in an economic system of any sort. Porphyry potential, skarn potential, British Columbia tier 1 jurisdiction, they own it all. So from a land perspective, it's like, okay, would you like to be able to buy an intact CRD / skarn / porphyry system in British Columbia for 12 million? Or 15 or whatever it will be post dilution? It's like, yeah, I think that sounds pretty cheap. I mean, and I remember talking to the guys, like, I mean, your jewel is the fact that, in my opinion, that you have that it's the real estate. I think tier 1 jurisdictions, Canada, US, whatever, I think that's going up in value. Lord knows it's harder and harder to permit mines, whatever. So I think the metal prices in almost everything will need to go up. So I think there's going to be a renaissance in the world figuring out that the true value of commodities, that it's actually what's underpinning our entire civilization. So if we don't build more mines, but we keep, growing our civilization, the commodity prices you might see one day with these finite resources, I think that might shock people. So I like that, and that's the stuff. It's like I see buys all over the place. I see buys all over the place, and I'm biased right now towards. I prefer Western jurisdictions, good Western jurisdictions today. So yeah, simple as that. And on that note, Magna Mining. I mean, this is one of the most fascinating things I've seen, I think. If you ask me here, it's like, are we ever going to get even close to filling some arbitrary gap on a short? I would say no, you would be absolutely crazy. This is the most advanced nickel PGM system in North America, I think. I mean, this is one of the most exclusive clubs you can be in. A semi-permitted nickel PGM project or projects in Sudbury, Canada. And it's trading like it's dirt. I mean, the valuation is like, no, there's a ton of this stuff. We're never going to need any nickel in Canada. We're never going to have any need for nickel or PGMs in Sudbury, Canada, of all places. Now nickel's going to be dead forever. PGMs are going to be dead forever, whatever. I find this is one of the most fascinating things. And of course, like I talked about earlier, it's like, what's going up in value? CapEx, higher rates, inflation. It's more expensive to build projects. Well, this is not even a high CapEx project. It's a low CapEx project. Okay, with toll milling potential. That's the thing. So you don't even need to build the processing facility. That's the thing. Okay. They pretty much got all the permits already. Well, I don't see that's going to be an issue, at least. Okay, if you're in a Western jurisdiction, typically the hardest part there is permitting. Yeah, you can have a project in Zambia or whatever. Maybe permitting will be really easy to do, or relatively easy to do, but that's still in Zambia. So if you are in tier 1 jurisdictions, typically your largest problem is to even get permits to build a mine there. Because you want to be in a tier 1 jurisdiction because you're probably not. I mean, the odds of you getting nationalized or whatever are very low, or somebody steals the project, or something happening that rebels take it over or whatever. So that's low. That's why it's like you get to keep the fruits of your labor. Problem is that you don't get to reap because you don't get the permits typically. Well, Magna basically has that box checked as well. And yeah, there's, Indonesian supply, Philippines supply or whatever they are, and China, yada yada. They're what is it, laterite, nickel? Yeah, but that's not gonna, first of all, be around forever. That's very high energy intensive. It's very energy intensive, and it's very, very dirty. That's not going to be around forever. And who knows, maybe, if the Western companies or car companies like, now we demand, based on ESG reasons, we must have a very green supply chain. Well, then you're going to have class 1 nickel from the sulfide deposits. And here that Sudbury does not have any child labor or anything like that. And they're not, they're not tearing up rainforests to produce the stuff. It's basically, Magna is in a unique position, and again, you can look at it, look at this two ways. Magna has been the biggest drag. It actually topped around year end, 2023. So yeah, Magna in the hodl folios has been the biggest drag because it's up until recently, when Condor and Hercules actually shot past Magna in terms of position size, because Magna has been going down and Condor and Hercules has been going up. Before that, it was the largest position in the hodl folios, I think almost this entire year. So that's been the main drag. Of course, you can bitch and moan about that. It's like, yeah, okay, this is kind of silly, and you're losing money on paper, whatever. But again, like I keep saying, you should always know if something goes up and down in price, yada yada, volatility, is that a blessing or a curse? Well, in hindsight, we see from the peak, we see this share performance. Okay, in hindsight, should have sold everything here. I could buy it all back here. Okay, but hindsight investing doesn't work because that's not a thing. Okay, so it's about the future, obviously. So, who knows? Again, and I've said this before, let's say, we don't know this, but let's say somebody would guarantee us Magna will be at $2 within 2 years. Okay. If Magna would go up here and then go like that, so let's say it went up like this and then like that, people would dream about that performance. Whoa, nice, exponential rise, not even profit taking, whatever, and let's say the nickel prices didn't correct or anything like that. It's just, steady climb. Not the steepest climb, but steady climb from then on out. And you would have made, I don't know, let's say you bought in here, whatever, you made 185. So let's say you have, let's say that's 200%. Let's say you started off with $10,000. Your position would be $3,000. Around, let's round it, 200%. Nice. That's a superb result over whatever, 2-3 years. 200%. Great. 10,000. Let's say it was worth what? Let's say you bought here 10,000. It got up there. So it got to 20,000, and now, let's say you're in the red. Let's say you're in the red. You're down 3.8 thousand. So you only got $6.2 thousand out of your $10,000 investment right now, instead of being here, let's say. Obviously, most people will look at those scenarios as totally different things. It's like, man, how smart was I? I love this sector. We're up here. I'm in the green. I feel smart. I feel rich. I made money on it. Whatever. Still, but what happens if it goes something like this? Alternate route. This was theoretical. People would dream about this, but let's say, well, it goes something like that. Let's say we do end up hitting $2, but this is the path it took. If you hold your position, you're down 38%. You end up making the exact same amount in the exact time frame as this, even though this felt good all the way through. But let's say you believe that, well, this is actually a much better buy. Here you didn't average up or anything, but let's say you kept your whole position. But all of a sudden you're thinking like, wait a minute, I owned 0.5% of the company, let's say, but now I think it's at least twice as good. I should own 2%, whatever. Let's say you double down. Instead you have $6,200 left. Let's say you add, so you get up to 10,000. You realize, you think that, wait, I should be adding here because it's so cheap. I mean, the market is absolutely clueless. It's pricing in that nickel will never recover. Nickel in Sudbury, PGMs in Sudbury will almost never be worth anything. You think that's wrong, that's stupid. Market is making a mistake. So you add a bit. You add $3,800 to your position. So you're at $10,000 again. And your paper loss is down from 38% to whatever. It's like you average down. Okay. And let's say the market ends up looking wrong in hindsight. Nickel PGMs in Sudbury is going to be worth something. And we are going to hit $2 at least in the future. Well, in that case, in the future, that position will be worth, will go up 400%. So instead of having, what was it, 30,000, you'll have $50,000. But you invested a bit more. You invested, what did I say, $13,800. But your position is going to be worth 50,000 instead of 30,000. And that's with a pretty small add, I was going to say. If you jack that up, if you think this is twice as good as when you first bought, you would have, added, who knows, $20,000. So you have 26,800, and that goes up for almost 400%. You know what I'm saying here? It's like, again, are these corrections we're seeing out there in the juniors, are they bad by default? Is a bear market really bad? Because people would dream about this share price development, but you might end up making more long term if you got these kinds of share. And I've shown that chart a bunch of times. Where you have how the dream curve looks like and what actually people make the most money from. Because there's a lot more opportunity if the story is intact, and we know that long term nothing is really changed and it's cheap. You should want this kind of share price performance. Actually, that this brings a lot more opportunity than if it just went up and then just crept up. Because this point here, for example, might be the best risk reward opportunity in this since the forming of the company. If it goes lower, that might be even better. I'm not saying that's the case. I wouldn't be surprised if that's the case. What I'm trying to say or show is that before you get pissed off by price performance of stocks. What you're saying, if you get pissed off, is what you're saying, what you're admitting to anybody who understands it, and to yourself, is that you have no idea what an opportunity is. You should know if a sagging price, a big price decline, is that if it's a sell, you should sell. If it's a buy and it becomes a better buy, that's an increasing opportunity. If you don't know which case it is, you don't know why it should go up, you don't know what you're doing, then you're going to get pissed off. Because you don't want to take any responsibility. Let's say you're like, well, I bought this and then I closed my eyes and hoped everything would be a smooth ride like this. And as soon as that's not followed, you get upset, you get pissed off. Whereas some stone cold killer who might realize that, hey, this project is worth a lot more than it is now, and it's only down like this because, I don't know, there's been, I mean, this looks like almost a perfect, I mean, resistance line. So who knows, maybe there's a bunch of traders here and traders that want this gap to close, whatever. Honestly, if nothing changes for the worse, if nickel doesn't get cut in half or whatever, it would be pretty good, perhaps even if they close this gap. Because that would be, I mean, think about it. It's like, maybe the value is up here somewhere. And because there's no interest in this sector, and the sector is dumb, and everybody's a momentum trader, whatever, and you have gap traders, so traders and, let's say, weak hands, whatever, I mean, you get an artificial price point, just an arbitrary gap here and that closed, and maybe, just maybe, price should be up here. That would never have happened if you didn't have a bunch of traders, piss poor sentiment, a gap traders as well, and everything feeding into the perfect downtrend, which gets people more pessimistic. Even less people want to buy, etc., etc. And then maybe, just maybe, you know, you get served up the best opportunity, maybe in the history of this company, and maybe in history ever in this company, depending on what happens in the future. So again, I mean, that it's a very good sign when you stop getting pissed off. It's like Condor, for example. There's been selling the last 2 days. I have a very big position in Condor, especially after it, because I plowed in heavily after the announced drilling. And you know, it sounds like, based on the Twitter the visuals described on Twitter, it looks like it's going well. I did not. I didn't panic. I mean, that position is down 20% in 2 days. There's been a lot of selling. I don't know where the selling is coming from. But if I get pissed off, it's like, yeah, do I get rattled? Of course, you just see selling from somewhere. But it might be because I'm not immune to herd mentality. I'm not immune. Of course, I impulsively get more bullish if I see a stock rising, because that's other people are obviously bullish on it. So that makes me more comfortable. It's like, oh, I'm not the only one here. There's other people who are excited about the stock. So I get that and all, but you should always know. Or, yeah, I mean, the more cool you can be. You don't see me in the Condor forum or the Magna forum like bitching and moaning about whatever. It is what it is. If it goes down, if something goes down in price, and you don't think it should go down in price, you think the long-term case is intact, that's a better opportunity. You might end up, like this shorts here, that might end up leading to you making more money on the same stock because of the heavy correction. So in that case, what are you pissed about? Are you pissed about the fact that you had an opportunity to make even more money? But if you don't know, if you don't understand what an opportunity is, you're of course going to end up throwing in the towel here. You bought in here, let's say, you throw in the towel here. And you're not even going to see what happens after that, because you already checked out. So in that case, this was a curse. If it goes something like this, which nobody can guarantee that it won't or it will, it might have been the best thing ever. That's why I keep coming back to the fact that it's not the bear markets or corrections that actually kill people, so you can't blame it on that. You should be blaming it on yourself. Because it's not the bear markets that kill people. I've been in every bear market since I started. This is my fourth. It's what people do in the bear markets that make people shoot themselves in the foot. So I don't buy that if some, it's been a shitty market, so that's why that's why you can't make money in the mining sector. Well, that's actually the reason why you can make a lot of money in the mining sector, because we have so brutal bear markets. Because the buys just go exponential. Anyway, this has been a long rant. I hope you got something out of it. Consider me biased. Assume my own shares of all companies mentioned. Most, if not all, I think, are banner sponsors as well. So consider me twice biased. And it's like I have absolutely no idea where this sector or gold is going to go in the short or medium term. I buy on, typically buy on price today versus long-term fundamentals of the particular companies. If it happens to be nickel, it's nickel. If it's copper, it's copper. If it's whatever. I'm bullish on most metals long-term anyway. Don't bet money you cannot afford to lose. And again, it's like, I don't think this is a time to really be a hero. I think you can have a real basket approach, and then that makes it easier to reshuffle. If you're all in on one stock, it's very hard to reshuffle in that case, because because there's no way to take advantage of any value dislocation intra-sector because you're only in one. Well, if it goes up, I guess you can reshuffle into another one, but yeah. But anyway, and don't invest money you cannot afford to lose or will need in the short term. Because you do not want to be, if this continues down here, you do not want to be forced to sell. I need to sell stuff, or I have sold stuff, because I have a big tax. Well, I need to pay taxes in like 2 weeks. That sucks. This is the worst time ever to actually need to sell and give away to the tax man. So I'm not even following my own advice. But that sucks. But that hey, it is what it is. It's not gonna be it's a hiccup. But I didn't foresee that it would still be this shitty today. And that's not my business. I don't need to be right timing wise. It would be lovely if I didn't have to sell when the sector was the cheapest level since 2015 or whatever. But it is what it is. Nothing to get upset about. I made the decision. I'm greedy. My fault. Okay. Goodbye, guys.